Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Thursday, March 29th, 2012 is sponsored by RealTick. All right, we have a lot going on today. Markets are selling off for the third day in a row, and the beauty of this is Bernanke comes out Monday morning after the worst week of the new year last week, and again, he pumps the markets up. He gives them that hot air boost on QE3, quantitative easing, and ultimately it was a non-event. And the reason being, folks, is people eventually see through that nonsense. And also, the markets having rallied up so much from October of last year and even December of last year, there's just not much more you can squeeze out of that orange. I mean, you squeeze an orange, there's only so much juice you're getting out of it. And at this point, the markets are, or at least apparently, they're at that level. So markets again, guys, down for the third day in a row. Spiders down $1.15. S&P's down 12 points, almost 1%. Nasdaq's leading the downward move, down 1% or 30 points. And the Dow seems to be a little less weak, down just 0.5% or 67 points. And part of the reason why the Dow's not down that much, you have IBM trading up 64 cents, which is a key component in that, as well as a couple other stocks that are performing pretty well. All right, now markets have made a little bit of a base here on an intraday basis, and again, you can see the gap down today was a beautiful gap down. We gapped down to yesterday's lows below this blue trend line. We retested the blue trend line. Now the blue trend line sloping up is very important. Why? Because if you go back and you scan all the way back, you can see that this is a major connector between this low going back all the way to the beginning of March and this pivot right around the mid-March period. And again, sure enough, today we gapped below that, which you could make a case for a river theory, although I would have preferred to have seen the gap down below yesterday's low as well for a pure river theory. Bottom line is, the markets have sold off from then. We continue to see downside, third down day in a row. I don't remember the last time we had 3 down days in a row in this market. It has been a long time. But we've seen a little bit of a base put in here. And the base being put in here is simply the aspect of the daily chart, which is now we're looking at the daily chart of the SPY, the 20 moving average. That's what you're hitting right now. That's why the markets are stalling here. Now, you've already hit it and pierced it a few times, so it's just a matter of time, in my opinion, until we break it. But maybe it's not today. You could wait a couple days, very possibly. Tomorrow being Friday, maybe they float this market up tomorrow. GDP numbers came out this morning. It was just a revision number, but it was really right in line with what was the last revision number we got. And that was final GDP today at 3%. I think the markets had hoped for a little bit better. But again, the bottom line is, folks, markets are just overbought. The dollar continues to kind of be in that neutral setting. We continue to look for the dollar to gain traction over the next couple weeks, which should continue to put markets under pressure. We've seen yields back below 4% on the 30-year. Rates again going back below, which is obviously meaning that bonds are doing pretty well, and that usually encompasses when markets do poorly, bonds usually do pretty well. All right. Taking a look at a couple other things, let's flip back to the intraday chart. Now, again, on the intraday chart, if you break lower, folks, and you take out that daily 20, the market's going to fall very, very quickly. But right now, it's being held up by that level. Apple. Many people are interested in Apple. Apple today is seeing some selling, but the question is, will it hold all day? Yesterday, we saw some selling midday, and then it bounced back by the close and ended positive. So again, that's a big factor here. We actually do have a little bit of a three-tail theory right here, which dictates a little bit of upside. I like the three-tail theories where they're so close to a moving average like that, because you get a little bit extra support right down there. Sure enough, you are getting a small intraday pop off the three-tail theory. And again, everything I'm talking about, confirmation, three-tail theory, river theory, these are all proprietary techniques, folks, developed here at InTheMoneyStocks.com. 7-day free trial. That's all you need to know. Come to In The Money Stocks, 7-day free trial. Research Center is for swing traders, day traders geared up towards the intraday stock chat. Okay, and again, come here and check it out. It's a 7-day free trial, so can't go wrong there. All right, bottom line is, Apple, again, floating up off the lows. Was down about $10. Now it's down about $8. So, again, a nice little bounce there. Also, another stock doing poorly today, which was a former strong player, JP Chase, down about 1.75%. This stock, again, led the rally late in the day yesterday. You can see the low being put in right here midday yesterday, and the buy program that just especially towards the end of the day exploded to the upside. JPM, even with the markets down yesterday, the two leading stocks, JP Morgan and Apple, were still up. Those are the keys to the market. Those stocks go red, the market will go red. Those stocks go big red, the market will go big red. It's just that simple. All right. Other stocks that are doing pretty well. I mentioned IBM is having a decent day, up 50 cents today. Also, Amazon, which fell $9 off the high from a couple days ago, getting a small bounce today. Again, here's your high and your rollover late on Tuesday into Wednesday, and then today being Thursday, it's bouncing just a little bit. Another stock that is up a little bit is Intel. Intel also doing well. Interesting with Intel and IBM, both kind of old school, safer stocks. I think they're viewed as safer plays. Where do you go for less volatility? Intel and IBM as opposed to some random tech names that are a little bit more volatile out there. All right, and again, you can see Intel, beautiful move off the lows. Let's take a look at the SMH actually, since we're looking at this. And yeah, I mean, the SMH is down 20 cents, 22 cents or so. It has come off the lows as well. Intel, obviously, a big component of that. All right. Scanning through, what else do we want to take a note of? Obviously, some of the calls I've given out over the last few days are doing very, very well on the short side based on the key analysis that we've done and so forth. Google was one. Google, I had a master level. I gave it out to my members at the short level. They're in the money nicely on that one as it's pulling back about $8 to $9 today. And also, just a couple days ago, Starbucks was given out, and this is a great one, folks. Starbucks already well over $1 in the money just from a basic day ago trigger. All right, 24, 48 hours ago triggering, and that's already in the money, well over $1 for members with a break-even stop. So bottom line is, if you read the markets, you can do very well. The markets are telling you where they're going to go. The stock charts are telling you where to go. We will teach you how to read them here at InTheMoneyStocks.com. It's that simple, folks. I will teach you. I know it sounds complex. How do I see the future? How do I read these stock charts? But it's really not that complex. And again, you can see the markets bouncing up just a little. We're seeing Apple bounce up a little bit as well. Question is, does this last? Again, the daily 20 moving average is what you're monitoring now, folks. That's what you're monitoring on the daily chart of the SPY. And again, that's why you're getting the bounce. And you can see the beautiful base. Again, this base down here coincides with the daily chart on the SPY, which mirrors the S&P 500 right there at the 20 moving average. Right now, if that breaks, all hell breaks loose. As long as it holds, they can float this market back off the lows. All right? And again, flipping back to the intraday, you can see that little green candle. We're getting a small buy program hitting Apple and a couple other stocks. Alrighty, guys. Enough said. I'm going to get back to trading. Have a great afternoon. Let's make some more money. Come here. Take the 7-day free trial at InTheMoneyStocks.com. Start profiting with the elite pros. Take care.